still doom scrolling, brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today. Bring your ambition into focus. Trade with Switch Markets.
Are you still trading everything manually? More traders are moving to automation, running strategies 24/7, removing emotion, and staying consistent. Now with Switch Markets, you've got the tools to build and run your own automated trading systems, so your strategy delivers even when you're asleep.
Meet Switch Markets, a broker for ambitious people who want to trade the financial markets.
You mean that I can trade things like Forex, stocks, even gold with you?
Yes, you can even trade the coffee bean market with us.
What about digital currencies? Can I trade them too?
Absolutely. Maybe now's your time to get in.
Oh, and are you regulated?
Yes, we are.
And how easy is it to deposit and withdraw? Will you charge me any fees?
It's easy. Deposit and withdraw instantly. Nice and simple. And unlike that guy, we won't grab any fees from you.
Do you have a low spread trading account?
We certainly do. Pick from our zero commission or our low spreads account. It's up to you.
Okay then, what makes you so different from every other broker out there?
Our 5-star rated real human customer support and our perks package worth thousands. No other broker can beat it.
So, who did you say you were again?
Switch to success. Trade with Switch Markets.
Getting started in trading shouldn't be complicated. You can open an account, get set up, and be ready to go pretty quickly. Now, if you've been thinking about it, take a look. Click the link in the description below. You can even start with a free demo account.
In trading, like climbing, the hardest step is to pause, hold, and trust your position. Ambition pulls you forward. Focus keeps you steady. Together, they take you higher. Bring your ambition into focus. Switch Markets.
Already trading with another broker? Fair enough. But if you haven't looked around lately, you might be missing out. Now, Switch Markets is picking up awards, offering tools most brokers don't, and their support actually shows up. It might be time for you to switch to Switch Markets. Click the link in the description below to get started today.
Discipline starts before the first punch is thrown. Focus sharpens in silence. Repetition builds control. Every movement prepares you for the fight ahead. Trading isn't luck. It's preparation. It's grit. Your fight is won long before the bell even rings. Champions trade with Switch Markets. It's time to bring your ambition into focus.
Are you still with the same broker? Now, there are better options out there. There's more tools, better support, and a platform built for traders. It's time that you demand more from your broker. Take a look at Switch Markets. Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is a U.S. mid-session brief. Today, we're going to go ahead and do some live trading. I'm looking at the WTI markets. We're also going to be looking at gold. We sort of had a bullish break in gold. Since I've been gone, I'm going to outline the trade idea and what exactly went wrong there. It actually never got elected, but it's unfortunate. I really liked that one. It took a month to set up, but sometimes that's what happens in trading. We saw a bullish break as opposed to a bearish break. Also, some NVIDIA analysis. NVIDIA has been hot lately, and I want to show you how the NVIDIA chart, the 5200, 50 SMA, 200 SMA, look a lot like the NASDAQ 100. Same basic chart, and you can see that these markets are just pushing higher and higher and higher. U.S. dollar Japanese yen is going to have a trade idea out. We had a very good trade idea that hit while I was away on the dollar yen. I want to show that, and then also we're going to do a little bit of probably some equities index futures trading with our time price offering charts. So I want to welcome everybody back to the room. It's been a while for me, about 2 weeks or so. I was out, had an opportunity to see the Canadian Rockies, and also cruised up to Alaska, took a look at some of the places in Alaska that were real special. Glacier Bay, if you've ever seen Glacier Bay in Alaska, it's absolutely unbelievable. I was struck in awe of the size and the enormity of it, but man alive, what an incredible view, what an experience. So I'm very happy that I got to do that, but I'm back in the saddle. First day back off of a vacation. Difficult, haven't made a trade yet. Need to get back in tune with the markets. It looks like the more things change, the more they stay the same. I was reading some of the news that came across the board while I was gone. You had CPI came in decent. It looked like it was lagging a bit. You had NFP for July was horrible. It showed a contraction. So we're going to talk a little bit about the Fed watch, how Kevin Warsh probably isn't going to hike interest rates like the whole world thought he was at least 2 weeks ago, unless something changes. Also, we'll recap the Iran war. That thing's falling apart. And some we're looking at some new political expectations for the fall. And I have to tell you that something that we've been onto for a long time here, it looks like it's developing. So it's going to change our markets dramatically, especially as we roll into 2027. So welcome back, everybody. Let's see, out there in YouTube land, Tina Jing. Hello, Shane. Hope you had a nice time away. I had a great time, Tina. I want to thank you for coming back around. Been a while. Hey, guys, in the How to Trade trading room, good to see you. Tuku. Hello, Coach. A warm welcome back. Thank you, Tuku. Sure appreciate it. Ralph H. Hey, Shane. Welcome back. Yeah, I have some business to take care of with scheduling things. So, Ralph, I'll get back to you a little bit later today. I got some. I'm still trying to figure out next week's schedule with regards to our live streams and also some private stuff that I have to take care of. But yeah, I'll be sure to answer everybody's questions that they may have in my private chat. That's for sure. All right, guys, let's go ahead and get started. This trade idea, first one right out of the box. We're looking at our time price offering charts. This is a great day to be using a TPO chart to be trading WTI crude oil. No question about it. Flat market, dead market, up about 0.86%. I would love to buy the point of control. And you can see right here our POC, our point of control is right in this area, right around 81.50 or so. Absolutely flat line. The market's flatlining right in this zone. A tremendous amount of compression, just ugly price action. It's what I would call a mess. A garbage can, but sometimes you gotta trade the garbage cans if you want to make any money, especially this time of year. So right here, I'm looking at a firm POC right around 81.55-ish, 81.54. I really like that. I'm just not sure we're going to get it. Right now we're printing about 81.96. We were very close a minute ago to getting that trade, but still really strong. Really a strong trade. Probably not the best market to be doing this on today, just because of the space between 81.96 and 81.54. However, there's a lot of potential here, maybe to get a late day scalp for a couple $100 trading 3 contracts. Wouldn't be a bad trade late in the day, but however, Friday, remember, we don't make big mistakes on Fridays. We make little mistakes on Fridays, and we go home for the weekend happy. So that's exactly what we want to talk about there. I do want to just get off and running with a few trades, though. This one right here, you're starting to see U.S. equities break towards the bear, sort of what we have developing here. And this is a textbook, sort of a B formation. It's not a great one. Realistically, this chain needs to be really thin for me to want to try to buy the bottom and take a shot at that middle. Just isn't there just yet. However, we are sort of on the verge of maybe getting a late day sell from down in this area somewhere. But we have to see the volume profile. The TPO has to move that U.S. session point of control down here. So sort of a lightly populated day. I mean, just not impressed at all with what's going on in the markets. I'm really not. We got some news items I'll cover, but as far as I'm concerned, relatively flat. Let's go ahead to the YM. This one's a little bit different. We do have a trade opportunity here. I think that we, if we get a shot at it, this would be a pretty good one. This is the E-mini Dow futures. What you look for right here is just a sell limit order, rock a couple of contracts. That's not really much money. We'll put 4 contracts on it at about $5 per, so your tick value would be about $20. I would recommend using a little bit higher tick values this late in the day, just because you're not going to get the volatility to really take a big move. You're going to be looking to take tight moves. So if we're looking to take a tight scalp here, it's not necessarily the worst idea to bump that leverage up a little bit. Or if you don't want to play with that kind of leverage, don't worry about it. You don't have to. That's for sure. Something right down in there, though, really a nice opportunity to sell that point of control. A53, 804, somewhere right around 53.8. Probably a relatively strong trade. It's not a trend, though. And I want everybody to understand that today is not a trend day. I don't care what the charts look like. Well, Shane, they're coming off. It's trending. It's not trending. You can look at the YM right now. E-mini Dow off about, 0.31%. Pretty good area for us to be hitting. If we do get an opportunity, is right there, right around that 794. I love that, right in front of 53.8. We have a high probability of really making that trade happen. It happens, maybe it doesn't, but we have a high probability of winning that trade if it does get elected. So I'm going to keep a close eye on that one. Our WTI crude oil trade is a ways off. That one's going to have to simmer for a bit. We're trading 81.97s right now. Other than that, I really don't have any data for you as far as the kind of trading week it's been for me, because it hasn't been one. I was in an airport in Vancouver. Flights got delayed, went from Vancouver to Seattle back to Missoula, Montana. And we were in the air all of about an hour 30, and it was an all-day thing. I was at the airport at 8:30 in the morning and got home at about 7 o'clock at night. I should have just drove. I could have driven it in that amount of time and avoided the crowds. However, I guess I ate some good airport food. I don't know what else to say about it. Tired of crowds, though. Glad to be back in front of tired of crowds. Glad to be back in front of the monitors here, and really getting back in the game. Important safety tip: if you find yourself being on vacation, I know a lot of you travel. I know several of you travel, have reached out. I know Tina's had travels all over the world. We have a trader down in Australia, Jeanette. She travels all over the world as well. And what I always want to stress is when you go on a trip and you get away from the markets, be very careful when you first come back. What you don't want to do is you don't want to dive right back in with huge leverage, because you've been off for a while and you're probably not seeing things as well as you need to be seeing them, at least to trade from a discretionary standpoint. Now, if you're a systems trader, shoot it. Shoot the moon, go for it. Whatever you got to do. Go for it. But if you're a discretionary trader, or you're trading something like a TPO chart, or I'm talking about news and identifying trends versus rotation, all those things, take it easy. Take it easy. The last thing you want to do is come back off a holiday and maybe not be as focused as you should be and dig a 4 or 5 digit hole. You don't want to do that. We always want to trade to the green whenever we possibly can. And what that means is it means keeping our losses relatively small relative to our wins. Everybody knows that. What they don't know is the leverage end of this. Be very careful with your leverage. The last thing you want to do is go out and bet the Ferrari first day back off of vacation because you feel like you're on top of the world. Believe me. I'll close today's live stream with a couple gambling stories. If I forget, I got some gambling done. It's been a while since I sat at the table and did some gambling, and I'll tell you a couple of beats that made me laugh and remember why I love trading as opposed to table games. Realistically, oh gosh, you have the game, you feel like you have the odds in your favor, and you got the money down, and then all of a sudden something happens. The beauty of it is with trading, we don't have to go down that road. We are in full control. Right now, I'm in full control of this trade. I know exactly what I'm looking for. We're looking for that POC. We want that U.S. session, sort of late U.S. session POC, point of control, to come into play. We know we're right up there, right around 53.8, 53.805. Okay, that's great. We've got a real good chance on this one. So let's go ahead and just let this one simmer. It's coming our way right this minute. I would love to get it right now. If I can get this trade right now, we're in great shape. Absolutely in great shape, no question about it. I would feel a lot better about a play like this as opposed to maybe hanging out by the roulette wheel, which is something I don't necessarily recommend, especially when things are not going well over the blackjack table. So definitely, this is one of the times when I just missed my trading dome. I missed my trading as opposed to sitting there and taking, I would say, negative expectation bets. That's a positive expectation bet, and I think we've got a really good chance to get it. All right, I'm going to go ahead and get on with the show. As soon as I switch the channel, though, I guarantee that we're going to get involved here, but that's okay. I'll switch it right back, and then we'll watch this trade unfold and get a little trade management there. But shooting for a tight 200. We got 4 contracts down, not very much if you're trading the E-mini Dow futures. Remember, $5 a tick. I know it may sound big. Remember, these are demo dollars, but this is a realistic trade that you could make pretty much across the board. You could trade this on a live account. You could trade this on a evaluation account, wherever you really wanted to trade it. You could definitely, this is not huge size. This really isn't huge size, but what makes it doable is that we don't get steamrolled. So we're going to have a real close eye on this. I'm going to cursor down to a 1-minute chart here in a second, and this is how we're going to go ahead and manage it. I want to watch this. I'm probably going to give it a few minutes to develop. One of the issues that we've had, and one of the issues you will have over the course of your trading career, especially when you're trading slow, flat markets like this time of day. A lot of times you'll have your entry, just the price will flirt with your entry and you won't get elected. We want this right now. We want this one right now. 53,804, that's fine. I would even be a little bit more aggressive. Let's go ahead and let's go 02s. Let's see if we can get that break. And then let's bring this down to, say, 92s. Essentially the same trade. Let's go right here. This is what we want right down there. It's not reset. In any case, we'll do it right there. 53,792s. That's what I'm looking for. Let's see if we get it. That kind of action, that kind of price action right there is what we want. That'll pay us quick. We just got to wait and see if we get elected. So we'll give it one more minute, and then I'll switch on to the news of the day, which is explosive. I mean, I've been out for a while, but, retail sales came in. It was absolutely horrible. We saw really a downturn in consumption. The Michigan Consumer Sentiment Index, that was another big one. Preliminary number came out today. People do not feel good about where things are here in the United States. So I'm sort of interested in sentiment, hurting consumption, potentially leading to a recession. That's essentially what I'm thinking. That's why I believe that our rate cut. Listen, I believe we were hiking rates, no question about it, because of inflation, the Iran war, yada, yada, yada. All of a sudden, those things have changed, and it was just over the course of 10 days I was gone. 12 days I was gone. Now those expectations have completely changed. All right, we're going to give this another minute to get elected. I want to manage this one in real time because if we do get hit, I want to get hit in real time and see if we can go down and get our price. All right, right now what I don't want to see is compression right in front of 53.8. We're starting to see that just a little bit. Theoretically, we could have sold probably 53.799s, but I'm not interested in that. Let's play that point of control and see exactly where it comes up. Yeah, your high right there is 53.798. We want this one right now. We want this one to take a stroll across 53.8. I mean, that's absolutely huge. If we could get that right this minute in the next 25 seconds, I would feel extremely confident about it. Here we go. Here we go. Let's get that break up over that 53.8 and see if we can go ahead and get involved for a nice little clean here. Solid trade. Good methodology. What's happening now? Okay, that high is 53.798. What I don't want to see happen here is this 1-minute chart trade sideways for the next 5 or 10 minutes. Number one, it bores me, and I know it bores you, but it also suggests that maybe we're going to break out higher. It's a pretty good, solid trade. We just got to get elected, and this is, unfortunately, the nature of the beast. You sit there and you watch the DOM, you get your numbers down, and you get ready to execute. All right, guys, let's go ahead and get away from that. I mean, as soon as I switch it, it will go. I feel like we're going to go any minute. But I like our entry point. Maybe we break it up over 53.8, but I would be surprised if it goes very far. It may, though. All right, right here. One more second here. 195, 53.795. We want to see that kick. We want to see that kick right now. Potentially get the downturn off of that 53.8. Are we going to get it? Are we going to get it? Notice how slow everything is. Great day to be trading market profile. It's just a little bit frustrating getting your entry points. All right, enough of that stuff. Let's go ahead and get out to a few news items here. I'll let you know when that goes live or if it goes live. The Iran war heats up. We were talking a lot about the Iran war before we began, before I went away. And essentially what had happened was we saw increased hostilities in the Mideast region. And what that led to, it led to a spike in crude oil prices. It led to sort of a bit of a downtick in U.S. stocks, at least a temporary one, and suggested that maybe things were not going well in Iran for the United States, and it looks like this conflict may go on and on and on and on and on. I'm not going to sit here and pretend to know what's happening in the Middle East because I don't. But what I do know is this sentiment is changing. It's going extremely negative, especially towards the United States prospects of doing anything remotely successful in the region. Today, we had a statement out of Vice President J.D. Vance that says cheap oil and gas are goal number one, and that's a lot different than the talking points from the administration, which have been no nuclear Iran. All of a sudden, you have the vice president probably thinking about his 2028 presidential aspirations. No doubt about it. The administration has seen the polls. I'm going to show you the polls and our poly market odds before we get off today and really speak to what's coming in November. We're going to see some incredible volatility and some incredible things. So what I'm saying is this. The Iran situation is incredibly murky. It's muddy, but it does look to me like Iran has full control over the Strait of Hormuz, and the United States can't do much about it. Oil supplies are running low. We're going to get into this more next week, but our SPR, Strategic Petroleum Reserve in the United States, lowest all-time levels really since we began building the reserve in 1983. And this would be something that is extremely difficult for the oil markets to price, because when the shortage hits, that means it's going to ramp up pressure on everybody in the West. The East is already feeling the pressure. We saw the pressure on the yen from not too long ago. It all stems from this right here. No oil coming out of there. U.S. eyes indefinite naval blockade. Vows to isolate Tehran. It's already been happening. It's not having any effect. U.S. to use economic tactics on Iran that have never been seen. I mean, yeah, what can you really do? Complete embargo? Are they just going to confiscate the $300 billion from Iranian assets and worldwide institutions? Perhaps. It certainly is possible. What I would say is this: very, very difficult situation here to even try to predict what's coming next. It looks to me, though, like Iran is going to keep control of the Strait of Hormuz, and there's no real end in sight of that. So we're going to go ahead and press on with that more next week, because it always happens over the weekends, it seems like, with the Iran war. As far as what we have here, that was our entry point, essentially. 53,799. That shouldn't really surprise us. Let's back up. It consolidated right in front of 53.8, which can be frustrating. So we back off to a 30-minute chart. Where's our point of control now? It's right up there at 53.805. I'm going to move this up now. Now, I know I'm making a lot of decisions on the fly, but it's very important that we have the ability to sort of adjust our game plan. Now we're going to shoot for maybe just a little bit more money. What happened? Why did I do that? I did it because we failed at 53.8. We went right there to 53,799, and we hit that level twice. And now we sort of retraced a little bit. I'm going to go for the full point of control, which is right up there. It's about three ticks higher than what we were looking at, 2 ticks. And you say, Shane, it's only 2 ticks. It could be exactly what we need to be successful here. So that's why I moved it. I don't want to be right there at 53,802 anymore. I'm afraid that it's going to break and run maybe up to 53,810. I have a better chance of holding on for dear life, at least for a minute or two, from about 53,805-ish. So let's go ahead and do that. I'm playing a very fine game here, though, and we'll see if it works. Relatively certain it's going to work. We'll see, though. That's the consolidation I did not want to see in front of 53.8. We wanted that initial rush to get us in, and now we're sort of consolidated, looking like we're going to break higher. Who knows? We'll wait and see. But it looks like we're going to get involved, and that would be just fine with me. We got to get some action here on a Friday. It's not no donation Friday yet, because we didn't trade the whole week and make a little bit of money. But if you did make money this week, 50% goes in your pocket. Number one, non-negotiable. Have a good weekend. Pay yourself for your time. If you didn't make any money this week, you probably need to either trade as usual, reduce your leverage, or shut it down. And also, if you lost big this week, then just shut it down and come back Monday. That's what I would recommend. And honestly, if you're out on vacation and you figure Friday's going to be your first day back in the saddle, I probably wouldn't be making any trades today. I'd probably wait for next Tuesday, take Friday and Monday to game plan, and go hard Tuesday, Wednesday, Thursday. I think that's probably the best recipe for success. So that's sort of our spiel on Iran. You can see that these things can twist in the wind forever before you get elected, but that is part of trading. We had a trade idea out that just didn't quite go our way. We did not get elected, and that was sort of frustrating. That was really frustrating. We had this one just set up beautifully. We had an inside July on a big June sell-off, and we just did not quite get it. We did not quite get it, and the reason why we didn't get it is because the price broke to the top side and didn't get us involved. Okay, let's go back over to this right here. We should get this right now. We're seeing extreme compression in front of 53.8. You have a lot of different ways to trade this. You could pull the trade completely. If I was trading huge size with a lot of money, I would definitely be thinking about pulling this thing, because you're getting compression here. More than likely, once we print that 53.8 or 53.801, you're going to run probably up into here somewhere, which I'm more than willing to take the risk. The real question is how long do we hold it? And the answer is not very long. Not very long. All right, you can see this is just messing with us. Okay, so we're looking at this gold trade, and you can see exactly what happened. Price broke to the top side. Anytime, if this is my last stream today, if you guys never see my face again and you never hear anything from me on the markets ever again, understand that when it comes to gold and you have an inside month, it's going to break. And that's exactly what's happened. That's exactly what's happened in early August. I mean, it's still, well, it's the 14th of August, but for me, it's early. You're looking at 8.37% this month already in 2 weeks. That's a big-time move. That's really a big-time move, especially after just a dead fish July and a big-time sell-off that came down in June. We were looking at June's low in this compression right here. Okay, let's get back on over to price action. Are we in yet? Are we finally in? 53, 53.8, 53. Nope. Unbelievable here. All right, back over here. But you can see exactly what happened. We broke to the top side, and we really wanted that breaker. We wanted that big June low, the compression there, and then you wanted to take the sell and play that break to the downside. That's what I was looking for. I saw it as not a 5-star trade, but a 10-star trade, because you know when gold trades on an inside month, you know what happens to it. It breaks. It's like clockwork. It breaks. So what happened here? The breakout is on. You're trading above last month's high, which was July's high. What do we go right to, though? Our macro 38% level, something like this. Our macro level was in play right around 44.28. We'll take a look at how this has been as topside resistance over the last several days. Something like this. It's been beautiful. This zone right in here, 44.25-ish. That has been absolutely beautiful. It's been amazing topside resistance 3 days in a row. If I'm watching the gold market, that is what I'm watching. I'm watching that level. If that thing does break above that zone, you're probably going to want to start thinking about the long side. Okay, we should be filled now in our trade. Okay, we're finally filled. You can see right there we got a little bit of a fill, a little bit of a positive price action, and now we're sort of moving higher. So let's go ahead and wait. Let's go to our 30-minute chart and see exactly where we're at with the point of control. Price really sort of breaking against us here. Not really too concerned about it just yet. Let's go ahead and let this one twist for a little while, but we are down a few bucks. You can see exactly what happened there. Price loaded up in front of that big round number of 53.8, and it broke. But now it's coming back down on our side a little bit. The real question is how long do we hold? Well, I mean, it's tough. Trading market profile is tough. It helps to have a lot of experience. It helps to be understanding of what's happening price action-wise on sort of a micro scale. And you can see we're only off about 0.25%. So if I'm only off 0.25% on the day for the U.S. session, essentially, what I would be looking at here is I'd say, okay, is that a trend? No. Do I have a ton of confidence in this point of control? Quite a bit. Is the market sort of grinding higher right now? Very little. Is it slow? Absolutely. What's the game? The game's 53.8. So if we trade back down from 53.804, we're going to get in a fight with 53.8. And the question is are those sellers there? Well, we don't know that just yet. I'm not really too discouraged because you can see this point of control acting pretty well as topside resistance. The market is rotating. It's rotating in this area. And the reason why it's rotating is because it's where we've done all the business. All the business has been done, at least during the U.S. session, is right in here. Just a majority of the business, buyers and sellers, have been fighting it out at about that 53.8 area, seemingly all day long. So the question is, who wins from this zone this round? Do the buyers win? Do the sellers win? Well, right now on the 30-minute chart, we sort of have the market overextended. I mean, you could take a look at just how far we've come. We've come off the pace to test that point of control. This is one we're probably going to have to be patient with. And if it breaks against us, we just take the loss. But right now it feels to me like we have an opportunity potentially to get that sell back beneath that 53.8 level. And if we do get that, we've got an incredible opportunity to make a little bit of money here. So now we're back down in the positive. Now this is when the game starts. Now the game has started. Are the bidders there at 53.8 or are the sellers there? Now the sellers are stepping in, testing the waters. 53.798. Okay, now we're down to 795, 794, 793. Show me 93s and 92s. Should I be holding or taking right now? Should we take the money right now or hold it? We're in the green. We're seeing compression right around our level. Should we be taking it or holding it? It's a tough question. It's slow. That market just came almost right down to our take profit, and now it's rotating back up against us. These are the types of questions that make you a successful trader, a winning trader, or a losing trader, especially if you're a scalper. And a lot of you, and I mean a lot of you, have wanted to be scalpers. Well, if you want to be a scalper, this is the game. So what's my trade right now? I feel pretty good about it. Why? Because I'm in the positive number one, but we're underneath 53.8. We're looking for one last rush. One last rush of selling, and we should hit our profit target. Now, is it worth it risk-wise for us to stay in this trade? That depends on your own personal goals. It depends on where you're at for the week and what your goals and your money management strategy is. When it comes to futures trading, when it comes to Forex trading, gold trading, if it comes to horse trading, real estate, money management is everything. You have to always know where you're at money-wise. For me, you're up 140, you're up 180, pay me off my 240, and then we'll go about our business and head on our way. So right there, 53,792, 53,792. Okay, now how about right now? Are we still going to hold? Are we still going to hold? No way. I'm not doing it. We went down, we flirted with our profit target how many times? Twice? 3 times? I can't risk my entire trade trying to get the last 20 bucks of my scalp. You can't do it. If you do it, you're going to wind up getting destroyed over the long run. I guarantee it. And not because you're wrong necessarily. If we would have held, we would have got paid right there. Was it worth the last $40 of that trade? No, not even close. Not even close. We went down there. I'll show you let's go on the 30-second chart here, 15-second chart. Our profit target was 92. Look at this. There was a pretty good run right there to 95. Okay, we didn't get paid right there. We were willing to be patient from there. Price goes right down. Price goes right down to 53,793. 1 tick away, really? And then it bounces up in our face. I'm out. I'm not playing that game. I'm not letting this thing dictate policy to me. And I damn sure I'm not trying to take a position in what is a rotational market. So we stuck with it. We got our entry. We worked through the psychology, and we had a pretty good trade. And we walked away with 180. I believe it was 180, something like that. We'll recap it at the end of the session. But that is scalping. A lot of you want to be scalpers. Or do you really want to be scalpers? Because that's what it is. Pretty good trade, though. I mean, I can't complain. I filled this up. That was a good way to really get started for I guess the August set of live streams. So as I look at the E-mini Dow, you can see right there that point of control has been an absolute monster. Very, very strong trade. Okay, let's get back over to gold. In any case, gold, you can see right there the entire game to the top side for gold is 44.25-ish. Probably a net seller from there until you break. Once you break, then the game's on to the top side. Unfortunately, down in here, the game for us, the bearish game, the bearish breakout that I was 10-star trading, it just wasn't there. It didn't develop for us. And because it didn't develop, well, we ran into what? Real trouble. We ran into real trouble. This right here is probably your downside support level for spot gold. I think you have to respect it. You definitely have to respect it since the bullish bump has taken us a little bit higher. So 4,069, 4,072.50. Damn fine entries to the top side. So I would be looking as a net bidder. Listen, I love gold because gold can be really fantastic when it rotates. We got a bullish break. That's true. That area, extremely hot. It's going to give us a lot of trades. We're net sellers there. We're net buyers down in here. And the beauty of this is, number one, it's pretty tight, so we could get a lot of trades for the rest of the month. What is there, 17 days left in the rest of the month? We may be able to get another 5 trades off of these levels. Now, the beauty of this is once this breaks and gets established, and then we're just bidding from that zone. That's all there is to it. Gold, sort of in no man's land right now. A lot of gold's, I guess, success, excuse me, has been predicated upon changing interest rate expectations. I mean, this is a good look at your DXY, your monthly DXY chart. What do you got right there? 101. There's your resistance zone. That was our key resistance zone, long-term resistance. That's when Trump gets in office right there. Market sort of crashes for the dollar. Everybody expected us to get a really, really weak dollar. Now we tested our level and failed there. That is why we are looking at the top side of equities to new all-time highs. That's why we're sort of thinking that, all of a sudden gold's looking like it may go back to 5,000. And then you're seeing a resurgence in silver. You're seeing crude oil sort of has a mind of its own. But if you get a bearish dollar, combined with an oil shortage, there's no top to the oil market. It could go anywhere. So this all is fascinating. Really a good illustration right there of how the fundamentals are panning out for the U.S. dollar. And look at our interest rate expectations. I mean, this is all there is to it. When you're taking a look at what we're expecting, that's only a 70% chance now, or excuse me, a 30% chance that you get that quarter-point rate hike. That is massive compared to what we were looking at. A 1 month, pretty much we're betting. We were pretty much betting that you're going to get that rate hike. And you can see you're not getting it now. It looks like they're going to hold rates firm in September. Take a look at this, though. This is the real kicker right here. This is December. You can take a look at this sort of a normal distribution. It now skews to the left. And what do you got right here? You got a situation where maybe Maybe they hike rates. Maybe. It says 70-30 or 67-33. It's 50-50 at best. It's 50-50 at best. Why? Because you've had an interesting NFP number that was absolutely horrible for the United States, and you also had CPI and PPI showing some signs of, life, meaning they've flatlined for a couple of months, but they're still extremely high. So the idea is that, hey, listen, inflation's not that bad. We're gonna get the war taken care of. It's all BS, guys. I mean, these guys are throwing darts at a board right now. And by these guys, I mean the administration, the U.S. Treasury Department, and the United States Federal Reserve. They're all throwing darts at a board because the numbers are not good. I'm going to go through a set of numbers here today that should show us really where we are at with regards to the whole shooting match. I'm going to show you retail sales. We're going to look at consumer sentiment, and then I'm going to show you the new poll numbers out for November's elections. And it all adds up to one thing. It really all adds up to one thing, and I wouldn't be surprised if the United States pulls out right at this juncture and just sort of takes the L. We'll see. We'll see how it happens, but sort of blown away right now by what's developed since I was last here. Put a trade idea out earlier today, though, and I do want to cover this one before we get into the news. Trade idea, U.S. dollar, Japanese yen. This is one that I really wanted to get out there because I think we can get it. We just got to be patient with it a little bit. Spike high right there, spike low. There's your rotation right there to 38%, 158.55-ish. That zone, 38% was beautiful. It was beautiful on the 6th of August. It was beautiful on the 7th of August. And what I mean is those shorts were absolutely fantastic. So when we know we have a hot Fibonacci sequence, you move right from the 38. A lot of people trade the 50%. I'm not going to fault you if you're a 50% trader. For me, I'm 62% as my next protocol. So what I'm looking for here, 62% right there, 160.61. I really want to get up there and get involved with the shorts, but I'm going to be very aggressive. And you're looking at about 160.49 sells, looking for a rotation back down into this level, back into the guts of that Fibonacci golden zone. We should get that. And if we get that, well, it's going to be a pretty good August because I think there's going to be a lot of sellers right there. A lot of sellers. So we'll just wait and see exactly what develops in next week's trade. More than likely, you see this compression right here. Boom, compression, break. You're going to have an opportunity up there to sell and put yourself in a potentially decent position. I mean, I don't have a crystal ball. I can't tell you the future. Wednesday-ish. That could be very, very good. Very good. Unless, of course, the world goes crazy and the BOJ does something else. But certainly we're in pretty good position right there. All right, let's go through some news here really quick, and it's going to be really quick. Core retail sales and retail sales both came in way below the Mendoza. We were looking for positive figures, positive prints out of both, and you've got negative prints, and those are really tough to swallow when you're in a consumer-based economy. When you see retail sales go down, that means that there's a problem with consumer sentiment. It means people aren't buying things. This isn't durable goods orders. This is retail sales. This is what people are buying. And the answer is not as much as they were. Not as much as they were last year and not as much as they were last month. Very, very difficult to wrap our heads around. And core retail sales, negative 0.3% beneath negative 0.2. Absolutely staggering that type of print is still occurring, especially with sort of the downturn in fuel prices for July. I mean, I know they're back up a little bit, but still, think about think about July here in the United States. What happens in July? 4th of July, Independence Day holiday. So America's 250th. All the shirts, all the hats, all the beers, all the fireworks, all of it. It didn't cut the mustard. The spending wasn't where it needed to be. Why? Well, I mean, in a word, expectations are bad. One of the great things about traveling a little bit, and this last year I thought about all the places that I've been. I mean, you're talking about Greece, you're talking about Florida, you're talking about Amsterdam, and then just up to Canada and Alaska. Been around a little bit and now had an opportunity to talk to a lot of people. And I've been known to ask questions, not of strangers. I don't do man on the street stuff, but if I'm at a table and I have a server or somebody's dropping off food or beverages, or if I'm in a store buying things or whatever, I always try to ask. I ask about rents. I ask about, how's the living here? Do you like living here? I don't really ask people what they're getting paid, but if it's a server situation, I'm always asking about what's the tip situation around here? How's the gratuities? Are those lining up well? How's your standard of living? Is your family good? Things like that. And it's been bad. I won't say bad because most people smile and they're happy. Hey, another day above ground's a good day, right? But it really is a challenge because rents are extremely high. Homes are extremely high priced. I just purchased a home and it's not nearly what I could have got 10 years ago for that money. Not even close. But you've got that going. What else? Fuel's high. Food. Things like food. Travel is extraordinarily expensive right now. Airfares, our airfares weren't great. They were expensive. And then everything else that goes around with it. Even, taxi cabs, Ubers, all of it. It's all expensive. And what it all adds up to is lagging sentiment. So right here, these are the preliminary figures out of the University of Michigan Consumer Sentiment Index coming in at 51 today for August. Horrible. It's not good. 51 beneath 54.7 expected, way beneath 55.2 expected. And you can see right there your expectations, which means that people believe it's going to get better or worse from here. 50.6, way beneath expectations, guys. So when we're looking at something like that, when we're looking at an item of that nature, we have to try to put it into perspective. Well, here's the exact read. The University of Michigan's Consumer Sentiment Index fell to 51 in early August of 2026. Let's see, down from 55.2 in July and below market expectations of 54.5, ending 2 consecutive months of improvement. Both major components weakened, with the current conditions index declining to 51.8 and the expectations measure falling to 50.6. The deterioration was broad-based across political and demographic groups, with particularly sharp declines among older, lower-income, and less educated consumers who are more exposed to rising prices. Okay, what does that mean? It means that things are not going in the right direction. A broad-based decline in sentiment. That's a political nightmare, and we have elections coming up, and we're going to get to those right now. Take a look at where sentiment was, consumer sentiment. This is University of Michigan numbers. These are preliminary. These are just survey data. All it is survey data. That's if you believe the University of Michigan. This used to be a really hot number. It's not so much anymore, but it's still worth referencing because you could see back here before COVID, 95s, 97s, really coming out of the deep depression. It wasn't a depression, but it was a deep recession of 2012. You started to finally see some green shoots of recovery in 2015, 2016, 2017, and people felt really good then. What was it like back then? Home prices were low here in the United States. Fuel prices were low here in the United States. Cost of capital was relatively low. So you got right here, high sentiment. What do you got in here? COVID destroys it. This is the heart of COVID right here. We thought we were out. Life was going back to normal. And then the reality of the inflation caused by the unlimited quantitative easing kicked in. And everybody sat around and said, well, my money's not worth anything anymore. We'll fight it back. We'll try to manage policy. Things will stabilize. Boom. That is the reason why there's probably a major political shift in the air, and sort of what I'm getting ready for the next year, next 2 years, next 3 years, next 4 years. Always be thinking ahead when it comes to where we can go cyclically. And that's a hard word to say, cyclically. But this chart right here, if you're a Gen Z or if you're a Zoomer out there, listen, I'm not trying to be the cool old guy in the foxhole with you. I'm not. But I'm telling you right now, this type of stuff is brutal. Because the sentiment is really, really, really taking a nosedive. And the reason why is because, a lot of the Gen Z folks, they're getting into their late 20s. They're getting to the point where, hey, I want to buy a house. I need to find a great job. I'm having trouble paying down my student loan debt. Feels like it's all lined up against me. You're not wrong. You're really not wrong. And that's one of the reasons why you see things like recessions and economic downturns, is because factions of the consumer base get sort of, I don't like the word disenfranchised, I really don't, but just discouraged. And I've been there. I was there when I was 30 and 31. Believe me, during the meltdown of 2008 to 12, I said, this thing's not going anywhere. So what had to happen to get out of that cycle is we had to see another era of cheap money, and you also had to see an area of opportunity. Now, beauty of that is there is going to be a lot of opportunity with technology, AI, things like that. But the cheap capital may not be coming as quick as we think. Just because we're not going to hike rates doesn't mean they're going to cut interest rates. And right now, mortgage rates, 30-year T-notes, T-bills, treasuries, those things are all still trading at a relatively high premium. So if that's the case, where the hell's the cheap money going to come from to maybe get a Zoomer into a house? It's going to be a challenge. It's going to be a real challenge. So I do sympathize in one respect, but this chart right here is probably one of the most important charts moving forward. Times back here before COVID, unlimited quantitative easing, unlimited lending, 0% interest rates. Theoretically, I think it's not a theory anymore. It entrenched inflation. So even though CPI and PPI sort of tapered when I was gone, those reports came out and everybody was loving life and thinking it was a great thing, they're still incredibly high. They're still absolutely incredibly high. And when you have high inflation over a prolonged period of time, it's called becoming entrenched. And what that does is that beats down consumer sentiment. And all of a sudden, the folks that wanted to buy things and wanted to really participate in the economy in a meaningful fashion, they don't. And when they don't, it has to be incentivized, means you have to cut interest rates down to nothing to get it going again. And we're a ways off of that. Even if they gradually ease at the Fed, I mean, you're still 18 months off of it. You're still a year off of it. So we are really getting into deep water with where the mindset, of the United States consumer is. And I won't speak for everybody globally, but what I will say is it's been a trend and a theme to the folks that I've talked about in all these different locations. That's all. All right, let's take a look at the midterm predictions. You see right here, this is sort of what this all boils down to. It all ties together. You can see that these flipped since I was gone. 53% chance Democrats take the Senate. The Republicans had a 55% chance. If the Democrats take the Senate and the Democrats are going to take the House, that's already over pretty much. I mean, this right here, that's going to happen. That typically does happen during the second year of an election, or not an election cycle, but of an incumbent presidency. Typically, you do get that 88% chance the Democrats take the House. So there's always a turnover, meaning like it happened to Obama. Obama was pretty popular, came in, and then ended up losing the midterms to the Republicans. The Republicans took control of the House, and I believe the Senate that year. I was not necessarily sure. This could be the same type of thing that happens to Trump. The reason why this is important is the Democrats, if they control the House of Representatives, will control the purse strings for the government. So that means you can cut off war funding. That means you can launch impeachments. That will happen day one. Day one, when the Democrats win the House, that'll happen. Now, this is what starts to get scary for the Republicans. If, in fact, the 53% chance, let's say the Democrats take this. Let's say they take those 3 seats. And let's say there's another, 1, 2, 3, 4, 5. Let's say there's about another 7 there's another 7, say Republicans, say rhinos, that are sympathetic to some of the Democrats' playbook, that don't like Trump very much, that don't like the Iran war. Then you start getting into really deep water with impeachment proceedings and impeachment hearings. And we're not trying to shock anybody by saying that you could see a real major political shift next year. We're already seeing the groundwork being laid for that. Now, I don't really care what you think if you're a Democrat or a Republican, but these are big things right here. These are major political things, and these represent major, and I mean major, shifts in what is going to potentially happen with regards to economic policy in the United States. Take a look at who's running number 3, the number 1 out of the Democrats right now. AOC is about as progressive and as hardcore liberal as it gets. That's things like reduced property rights. That's things like higher income taxes. That is a major shift economically from what these two are likely to deliver. And even J.D. Vance, that's why the statement that came out and said, hey, we want oil, not necessarily a nuclear question, starting to get away from the Iran war. Let's get on over to Iran and see what's happening. Strait of Hormuz traffic returns to normal by when? Ain't going to happen. Take me out to December 31st. 46. Look where we were. Look where we were back in June, back in the middle of June during the MOU. Remember those live streams? I was covering the MOU. We believe that it was, by the end of the year, it was back to normal, business as usual. And this is going from bad to worse. And the longer that this goes on, the more pressure gets placed on the global energy markets, and that has a potential drag on everything. As far as, the rest of the Iran stuff, I mean, I can get into there, blockades. I really don't care about any of that. Ceasefires, the Al-Mandeb Strait effectively closed. Right now, it's being incredibly influenced
by the Houthis in Yemen. This right here, it's not open by any stretch, but effectively closed. That means no business going in and out. Nuclear deals and things, that stuff's all off the table in my view right now. Strait of Hormuz traffic is the big one. Also, the things that we're looking at is, are we expecting, escalation from the United States? Karg Island, under Iranian control, agreements. It's just so muddy right now. Will the U.S. invade Iran? That was always my biggest one. With those poll numbers, I could show you the polls, but those poly-market numbers are incredibly important. I think they're more valuable than any poll you're going to get out there. I really do. But when you start looking at this stuff, remember this, back in March, we were pretty much ready to go in. You were going to see something on Karg Island. You were going to see a move in the Strait of Hormuz. And now it looks like the United States is looking for sort of, they've been looking for an off-ramp, Trump has been, but it doesn't look like you're going in. And if you're not going in, at least this year, are you going in next year? And are you going to be able to go in and restore some sort of or normalcy to the global oil trade if the Democrats have the House of Representatives and the Senate? And the answer is no, it won't happen. It all fits together. A lot of people out there, a lot of folks out there, they got radio shows and live streams where they just talk about this nonstop. And they say, oh, it's full spectrum analysis. No, it's not. It's just common sense. We're trading these markets. We've got to understand what's driving these markets and where we can be going. That's what the institutions are thinking. How about this for crypto? Trump's into crypto big, no question about it. The administration is incredibly bullish on crypto, holding a tremendous amount of Bitcoin. And also it's coming out that some of the players in the administration are involved in crypto startups. Well, that's great, right? And I think Trump made $4 billion or $2 billion of it was from crypto. And that's great. If it's all legal, it's all legal. I don't know anything about it, but I will tell you this. I know charts and I have a pretty good idea of what happens to Bitcoin when regulation becomes a very big reality. And you're already seeing it. You're seeing it this year. Big time downturn right there. Spike low, right off of that low up to that high. And you can see we bounced almost perfectly. Almost, we're going from the lows back in January of 2022 to those euphoric highs back in 2025. Not in January, but just this is a yearly chart. But we bounced right off of that 62%. We had the trade idea for you. It was very good. Bounces up. What do you think happens when the Democrats come in and they launch impeachment proceedings against not just Trump, but a lot of folks in the cabinet, and they start citing maybe things like insider trading, maybe things like crypto market manipulation? We're getting way ahead of ourselves, but I was asked the question earlier on the X platform. It's like, what do you think about crypto? And I said, I think the downside for Bitcoin right now is very big, but it depends on what happens in the elections. I don't care how many institutions are stockpiling Bitcoin and holding it. I know that's important, but don't think that they won't start scaling positions down as soon as that election gets closer and more clarity is brought to the political situation. If I was holding crypto right now, that would be what I'm looking at. We know that's what Jamie Dimon's looking at. We know that's what the big dogs are looking at. So if you're trading crypto, be ready for the political implications of what can happen in November. That's all I can really say about it. But this isn't a political live stream. We're traders here, but we got to know what all that stuff means. And, there's a trade right there that I guess we should have stayed in. Our WTI crude oil trade, we didn't get it. We wanted to be net bidders down here. I guess we were just 30 minutes too late, and that's okay. That happens definitely with the point of control stuff often. We got a couple more markets to look at here, but I did get behind on some of your questions, and we may try to pick off one more trade. I might cursor over to that E-mini NASDAQ and see if we can grab one towards the end of the session, but that is, we already missed it. I was going off on a tangent about politics, but you can see right there, that point of control is just a thing of beauty for this NASDAQ. If it breaks high, though, I would be I'm always worried when I see double dojis. Always worried. Boom, boom, out go the lights. So we're going to go ahead and we're going to hold our water right now, but this was pretty good stuff. We probably could have got that trade as well. That's all right, though. All right, way behind on the live chat, guys. We got some great questions out there. Give me a second to sort of manage it. All right, let me see. All right, let me see. Ayub, why not the 920 EMA today? Because nothing's moving. That's why. You show up and you look at the markets, and the first thing you should be thinking is, okay, is the market moving? If we were going to trade scalp 920 EMAs, we would have done it this morning on the U.S. Open, U.S. London overlap. We could have done that. If you're trading at this time of day on a Friday, no. We can do workshops and strategy sessions and things on a Friday, but today's not the day to be trading crossovers. I made a video 3 times not to trade crossovers. Check it out. It's over on the How to Trade Calm YouTube channel. Ralph H. Sorry, Ralph, I got a little bit behind. Any positive news for the future? Yeah, I got some positive news. I'm not going to be too much of a drag here. A couple of things could really go well. And this is the reason why the markets are trending higher right now. The stocks are right at all-time highs. Number one is there is a possibility, a real serious possibility, that you're going to get a dovish Fed in 2027, really no matter what happens in the Gulf. No matter what happens. Now, the other thing that could really take things higher, as soon as you get those rate cuts, your tech sector is going to explode, and the AI supposedly is going to be not necessarily a consumer of jobs, but a purveyor of jobs. It's going to produce jobs, or a producer of jobs. I guess purveyor is not the right word, but it's going to bring a lot of new opportunities. I heard it earlier today. I heard somebody compare it to the electrification of the United States when the electrical grid came online. Maybe. Those two things are good. I mean, the growth there is immeasurable, so there may be a chance that we get an opportunity to ride that. What is positive, though, and what I'm driving at here, and there's no reason. I mean, I don't sit up here and say all this doom and gloom with a smile because I like it. It's because if we know what's coming, we can trade it. If we know there's a potentially riff in the economy, I mean, there's everybody out there right now predicting a market meltdown in World War III. That's what they're all predicting. What concerned me personally about the situation was what happened with the BOJ in the United States, essentially showing up and propping up the yen. That worried me. I said, okay, so now we're talking global currency collapses. That's not good. That means maybe you're on the verge of something. However, if we know what's coming, we can get on the right side of it. So I think that there's a great chance for some good stuff to come out of all this. Is it the end of the world if Iran charges a toll for boats to go through the Strait of Hormuz? Let's say everybody agrees to a minor toll, and they'll take a small one. I mean, the 7%, they were talking about 7% on each load. Nobody's going to agree to that, but they might agree to 1 or 0.5%. That'll just get baked into the cake. I mean, that world could probably live with that. I think that could be a positive thing just to get the oil going back in the right direction. As far as could there be an agreement out of the Middle East? If there is an agreement and a peace, that's a positive thing, Ralph. That'll drive markets absolutely crazy because they haven't raised interest rates yet. And Warsh can go in and he can start slashing them. And what that'll do is create the jobs. That'll boost that NFP number. And maybe they can camouflage those rate cuts in the CPI and PPIs because you'll get that energy pressure sort of mitigated. So yeah, there are some ways that this thing can go, but I have to tell you, increasingly by the day, I'm growing more and more skeptical about where this whole thing's going. And that's just from talking to people, from looking at these markets, thinking, man, am I just reading it wrong? And I don't think so. I really don't. This Iran war has gone on for a long time. And remember, 4 weeks. We should have it wrapped up in a couple of weeks. 4 weeks. There's no sign that this is going to end anytime soon. And that's where we're at. And the longer that it goes, man, the greater the pressure gets on the global financial system, the greater the pressure is on the energy structure. And that is what really makes me step back. And that's because I've been trading crude oil for 15 years now. I've been watching this stuff. We knew that Arab Spring back in 2011 was temporary. We knew that. We said this is going to be over quick. But the Iranian question, there's no end to it. How is it going to end? I don't know. Babjeez. Hello, Shane. Welcome back. I didn't expect you back on a Friday. How was bass fishing? I didn't do any fishing. Nope, I didn't do any fishing. Did some whale watching. Saw some amazing country. I actually took a cruise on a small boat. Would never get on a big one. Those things are huge. But the smaller ship out of Holland, actually, that left from Vancouver, went up to Juneau. and then Skagway, and then Ketchikan, and then back to Glacier Bay, or no, Skagway to Glacier Bay, and then Ketchikan, and then back down the British Columbia coast. That was fantastic. Got to see an opportunity to see a lot of country, whales, birds, eagles. They got a lot of eagles in Alaska. I didn't know that. Fish, salmon, saw a lot of salmon. Didn't do any fishing though. Had a buddy that went. He went fishing and they caught up just a ton of fish. No bass though. They were up there catching salmon and halibut. But pretty amazing country. If you're from that neck of the woods, or if you've ever seen it, I mean, it was really blew me away. But yeah, no fishing. BTC is the biggest scheme of wealth transfer. Daniel, I tend to agree with you. I think that we could be in a major turning point for crypto, and for everybody out there that's bullish, that's great. That's great. Good for you. Stick to your guns. Do not let me talk. Don't let somebody that's on a live stream looking at charts scare you off of anything you do. Do what you do, but just be ready, because the bottom can come out, can fall out of that thing. In our technicals, man, the technicals on this Bitcoin chart, I mean, we're always looking for evidence on what we say and try to back it up with evidence. That's evidence. 62%. 38% is a strong trend. As long as you're above 62%, the trend is still technically valid. So right now, the bullish trend is still technically valid. Once we break beneath that and get established down there, maybe around 50, maybe it's a slow bleed to 55, to 52, to 50, to 48. Got to be really careful, because the institutional buy, or at least the technical buy for me, maybe later this year or maybe early next year, man, people are going to back up the Brinks truck at 40,000. Now that's still a fair value. I mean, that's a huge valuation for Bitcoin, but it's not 125,000. So be careful with crypto. Could be great. Could turn out to be really great. Could also just be a massive washout. Maybe one of the biggest we've ever seen. So yeah. So hope all is good, and happy Friday. Yeah, I'm doing well. Thank you. A little bit tired from the travels, but that's okay. Let's see. AI will bring a lot of jobs for clever people, and the dumb ones will be replaced. Well, and unfortunately, I get the feeling humanity gets dumber by the day. There's some smart people out there, though, Daniel. Believe me. But I tell you what, you can make a case that the AI is going to really streamline the jobs market. A lot of the jobs are going away. There's going to be new ones, and those new ones may be really great, but they're not here yet. Not that I've seen. Even though the PPI and CPI were soft, PPI was still inflationary with 0.2%. Well, here's the thing, and we'll talk inflation real quick, and then I'll go ahead and sign off. But let's go. I want CPI. Okay, this is a 1 year. This is where you are 1 year. Back it up to 10 years. 2020. That's when the game started. 100%. Unlimited QE to prop us up after COVID. Inflation took a major trajectory. A major trajectory. Flattens out, takes off again. Flattens out, takes off again. We are relatively flat through 2024, right? And then what happens right here? You get that 0.5 point rate cut right before the election of 2024. Inflation takes off again. They shut the government down because they didn't want to report the inflation numbers last fall, right? Now look what happens. You come here, and now they're going to say, "Oh, that's just inflation caused by the Iran war." So now you've had back-to-back months, and people believe that, okay, we're coming out of this inflationary cycle. Maybe we are, maybe we aren't. The problem is I can't access the long-term data. I don't have a subscription to this website, but what you will see is that this trajectory, I mean, you can see it right here, but where you really need to look at this chart is like back in the 50s and the 60s and the 70s and the 80s, where you just see inflation just sort of, and then this just explodes. What happened here was the end of the financial world. In my opinion, I mean, that was, you start talking about transfers of wealth. Holy cow. I mean, look at it. So when we start talking about, okay, let's get out to our markets. Okay, what's NVIDIA? What's something like NVIDIA worth? Well, take a look at that inflation chart. What's a dollar worth right now? Is NVIDIA, is $225 a share? What's that really worth 5 years ago, and you just rework the inflation rate, and I'll tell you what that thing's priced at. Has it outperformed inflation? Yeah, it has. But is it really worth what it's worth? Beauty of this is you got that golden cross in the video right here back on the 27th of June, 2025. Since then, this is a daily chart. Since then, we thought we had a correction. That was the inflection point. The market was looking to turn in April of 2026. Where were you? You were height of the war, right? Had some daily closes beneath that 200. People were panicking here. March 30th, panicking. And then the buyback came on. Something happened right in here that said, okay, things are going to be fine. All-time highs pulled back. Now where are you headed? All-time highs up there at what, 236? We're at 225. It's almost a guarantee you make a new all-time high in NVIDIA. Look at the distance between these EMAs, the 50-day EMA and the 200-day EMA. They're getting bigger. Simple moving averages. They're getting bigger. And when it's getting bigger, you're starting to flatten off a little here. But when that distance is widening, it means there is some real trajectory to the top side. That means this market's still directional. So that's absolutely, it's astonishing, really. It withstood the storm, the war storm, and the market's still going higher. Even though the war is nowhere near being over, it is settling into a situation where it's becoming predictable, right? The markets aren't stupid. They can price things. It's becoming predictable. Believe me, $80 crude oil, $82 crude oil is not the worst situation when you're talking about, a war in the Middle East. It's not. I mean, can you live with 80? Probably for a while. Yeah. Can you live with 125 or 150? No. That knockout punch would come sweet. It would come very, very swiftly. That's why nobody believes we're going there. They believe they're going to figure something out. Could be a tariff. Could be something else. NASDAQ, same thing. NASDAQ 100. Death cross. There was your weave. There was your tariff scare of 20. And notice the tariffs. Nobody's even talking about Trump's new tariffs because they don't matter. They don't drive the market anymore. There was the tariff scare, Liberation Day, April 2025. Remember that? Oh, no, the world's over. And then it bounces back. You get that golden cross back in June, and it has been off to the races. There was your inflection point back during this war, and it absolutely took off. You're going to new all-time highs. No question about it. And, where does the NASDAQ stop at? Let's say you get a resolution in the Gulf. Like Ralph was just asking, any positive news for the future? Let's say you get a resolution in the Gulf, something the world can live with. Everybody goes home for a while. You start seeing the interest rate cuts. Maybe inflation comes down a little bit. Jobs market picks up. Where does the NASDAQ go in that situation? When all of a sudden you're going to have Anthropic potentially launching a huge IPO like SpaceX. OpenAI potentially coming into the game. Those AI distributors are going to be getting public money. They're going to be taking public investiture. What does that mean for the expansion of the space? What does that mean for the expansion of the NASDAQ? What does that do to a chip maker like NVIDIA? And the answer is it all goes up. Is it all real, though? That's debatable. That really is debatable. That's for sure. Daniel, long WT every Friday just to make sure. You can't do it. It's too risky. You can't do it. About the time you do it, we got peace in the Middle East and the market opens $75 on Monday. You can't do it. I like it, though. It's aggressive. Hello, sir. You know Bangladeshi? No, I don't know Bangladeshi. My apologies, Bib. I barely speak English. All right, guys, I'm going to go ahead and sign off. It's good being back. A little bit, I'm still getting back in the swing of it today. A pretty good opening trade, though. Was not bad. Missed a few other ones. Wanted to talk, sort of set the stage for where we're going to be, a little bit later this week or later next week. We're going to be back into it full tilt next week. More trading, but you can see right here we had one trade today, plus 180, and we paid $20 in commissions. So you can see that we're up about We're not up 210. We're up 200 today, or 180 today, 160 today after commissions. So that's not necessarily a bad trading day, especially for a Friday, fresh off of vacation. Not bad. Depends on where inflation goes and how much we're going to need to make a day to survive in this world. All right, sir, I want to join your Discord. I don't have a Discord. Just go ahead and check it out over at howtotrade.com. You can get a free subscription there, and you can sort of send me a private message if you'd like. Also, you can follow me on X if you want to read some of what I put out on my X account. I usually do that a few times a day with trade ideas and things. But go ahead on over to howtotrade.com. Sign up for a free account. You can just click on my picture, send me a private message, and I will get back to you. As far as what we can be looking at here for the near future. We'll have a full schedule, a full slate of live streams for next week, probably right around the same time. We're going to be doing a lot more trading. We're also going to have a revamp. This live stream is going to be completely revamped. We're going to sort of transition into more of a modern outlook on what a trading live stream is, because I'm more than happy to sit here and trade and put a P&L board up there and do it all. Seems like that's what everybody's doing. I go, I don't care. I've been doing that for years. And then we'll have different streams where we'll talk a little news. Also, check out Switch Markets if you need to open up an account. Be sure to check out our market analysis videos. Those drop before the Tuesday London session. And then also you can check out our newsletter as well. I think even if you register for a Switch Markets account, you get our newsletter. I'll write that one up on a Monday and then make the videos on the Mondays so you guys have them for the Tuesday London session. So those are ready to go. A lot of content every single week. You check me out on ShaneV_Trader on X as well. And yeah, other than that, we're going to have a lot of fun. And that's the big thing I want to stress. We're going to have a lot of fun. One last thing I'm going to say, because I said I'd tell a gambling story. I'm not a big gambler anymore. I used to play table games. Right now, I just trading is completely just made all the gambling just look like a real fool's errand. So we're always called gamblers. They're always called traders gamblers. You're a gambler. You're a gambler. Believe me. I sat there at the roulette wheel, and I was just playing a very basic, sort of, they call it a boxing one, but I had a couple hot numbers that I was playing, and then I would box the corners on them. And I believe I lost 20 times in a row. 22. I had to count. Now, granted, I'm not betting a lot of money on these things. I don't know what it was per roll. I'm not gonna divulge that. But I believe I went down 24 times in a row. In trading, if I lose 2 in a row, I stop for the day because that's extremely rare. 21 in a row. So the next time you're sitting next to a roulette wheel and you think it's a good idea, it's not. You believe me. Casino games, table games, things like blackjack, things like roulette, things like dice, craps, whatever the casino's putting out there, slot machines, whatever they're putting out there, it's a loser. You cannot win long-term doing it. However, trading, you can switch those odds in your favor, and you can do it managing your trades and managing your money in a specific fashion. Now, I showed you a little bit of that today. We're going to be doing a lot more of that type of thing, and we'll show you week in and week out how you can be turning money, making money in these markets. Now, it's not easy. You're going to have to use your head, and you're going to have to learn. But I would much rather put the effort in to learning how to trade than sit there and hoping that you hit red or black, or you hit a 22 or a 13. Believe me, gambling's for entertainment purposes and fun only. Trading is very serious business, very serious. I take it very seriously. All right, everybody, I'm out. Have a fantastic trading session. Man, we went long today. A lot to cover, though. Good to be back. I'll have the trading schedule up for next week. I'm in the How to Trade trading room, so just check out the upcoming streams. Portal there in the HTT trading room, and reach out. Head on over there, reach out, say hi. Be looking for those market analysis videos. Those will come out next week on your Switch Markets YouTube channel. And also, if you need a broker, head on over to Switch. They'll get you going. up to 5,000 credit. Start with as little as $50 and get up and rolling today. You're welcome, Ralph. All right, everybody. Have a fantastic trading day. Daniel, looking forward to it. Have a nice weekend. I absolutely will. You guys have a fantastic weekend. Get some rest. We'll be back Monday, ready to rock and roll. All right, everybody. Have a fantastic trading session. As always, trade the action well, and we'll talk soon. See you.